Welcome to our 220th weekly webcast. Now, if this is the first time you're joining the webcast, welcome. And if you're a returning viewer, welcome back. And the way this call works is this is an AMA, like on Reddit, meaning ask me anything. You can ask me investing questions, business questions, career questions, or any questions. And my humble goal is to help you take your career, company, or investments to the next level. Now, please continue to type your questions. And before I answer your questions, I want to talk about the difference between accounting and finance and the one simple, crucial driver that helps us to value companies and forecast financial statements. Now, Warren Buffett once said, accounting is the language of business, and you have to be as comfortable with that as you are with your own native language to really evaluate a business. So, what is the difference between accounting and finance? Well, accounting is based on what has already happened in the past, and accounting is more of a science, as you have to be precise and record exactly what has occurred. Now, finance is more of an art, as you're predicting the future through financial projections. And in order to predict the future, we have to really understand the past. And once we understand the basics of accounting, then we can look for patterns in the accounting data in order to understand the health of the company, and we can predict what the future financial statements might look like. And finance it's really subject to interpretations, and it's based on your assumptions. And once we forecast future financial statements, then we can come up with the appropriate target price for an investment, or we can decide whether or not it makes sense to launch a new company or enter a new market. Now, Steve Jobs once said, manage the top line, your strategy, your people, and your products, and the bottom line will follow. It's so true. And please don't be intimidated by accounting and finance, because it initially all comes down to one simple rule, which is we must understand and forecast revenue, which is also called sales. Now, revenue is the top line of the income statement, and net income is the bottom line of the income statement. Okay, net income is also called profits. And when an executive or an investor says, what is your top line growth? Well, they're referring to what is your revenue growth. And when you hear an executive say, what is your bottom line growth? That's how executives sound. This refers to what is your net income growth, okay? And once we understand the top line, which is revenue, then we can analyze what percent of revenue many of our expense items are, including the following expense items: the cost of the product or service we're selling as a percent of revenue, sales and marketing expenses as a percent of revenue, research and development expenses as a percent of revenue, and general and administrative and other expenses as a percent of revenue. Okay, now we all know that revenue minus all expenses equals net income. And once we understand what net income is, or might be, among other steps, then we can decide whether to invest in a company or decide to launch a new company or enter a brand new market. Now, before we discuss the income statement, we need to thoroughly understand revenue. Okay, now, revenue is the primary driver of accounting and finance, and there's a reason why great salespeople are also great CEOs and entrepreneurs. Now, Nathan Myhrvold, who is the former chief technology officer at Microsoft, once said, in market research I did at Microsoft in the early 1990s, I estimated that the Wall Street Journal took in about 75 cents per copy from subscribers, $1.25 at the newsstand, and a whopping $5 per copy from ads. So the ad revenue let them run a far bigger newsroom than subscribers were paying for. Now, all companies have at least one dominant revenue driver that causes revenue to change. And financial analysts that cover a specific sector, like the retail industry, they spend a lot of time understanding what the revenue driver is for companies in the sector that they're focused on. And investors are cautious not to give a company that they're analyzing too much credit for acquired growth, meaning revenue growth as a result of making large acquisitions. Rather, we need to focus on organic revenue growth, meaning revenue growth that is created internally. And if we only focus on revenue growth that is a result of one company acquiring another company, meaning non-organic revenue growth, then it might look like revenue grew materially year over year as reflected at the top of the income statement. However, this does not always reflect the health of the financial statements, as the company making the acquisition might have taken on a lot of debt or spent way too much cash or issued too many shares in order to fund that acquisition. For example, if McDonald's, Starbucks, or Lululemon acquired a large company, then this could result in significant year-over-year revenue growth. But the issue might be that those aforementioned companies overpaid for an acquisition, or they diluted shareholders with the acquisition, as profitability metrics could really deteriorate when we analyze financial ratios. And so when assessing what drives revenue, it can be different based on the industry. So, for example, in the retail sector, the primary revenue driver is called same-store sales, which is the year-over-year organic revenue growth of a single store. And for decades after McDonald's IPO back in 1965, the company saw material year-over-year organic revenue growth, which investors loved as the stock rose several thousand%. However, with all great companies and countries too, it's very difficult to grow in the long run, just given the law of large numbers. And there's a reason why the revenue for the United States economy, which we can kind of think of as GDP, can never grow more than a few percent each year. So how did McDonald's, ticker MCD, how did McDonald's reignite an acceleration in the growth of same-store sales? Well, they used the following strategies. Number one, their employees cross-sold additional products to customers by saying, would you like a drink with that, or would you like fries with your order? They also started selling coffee. Then they introduced salads and other products. And some franchises started selling breakfast all day long. And some franchises transitioned to being open 24 hours a day. And also, this is fascinating, in order to stop customers from sitting in their seats for too long, McDonald's created hard plastic seats that are really uncomfortable to sit on for too long. And they started installing automated screen-based order systems to increase the speed of the checkout process. And then they also offer delivery now in many markets. And so let's talk about other industries. When assessing what drives revenue in the technology, media, and telecommunications sector, we often look at ARPU, okay? And ARPU, ARPU, stands for average revenue per unit. And this is a reason why some telecommunications and computer companies often bundle way too much software on their devices. Now, technology, media, and telecom companies are often assessed by investors on the number of monthly subscribers, as well as the average selling price, or ASP, okay? The average selling price of the monthly subscriptions and churn, meaning what percent of customers end their subscriptions every month. Now, when it comes to internet companies for drivers, we often look at the number of subscribers, which venture capitalists refer to as subs. And VCs focused on tech companies often invest in early stage companies that have minimal revenue. And as a result, they need to spend a lot of time analyzing the number of subs or subscribers. Now, using a Kevin Costner, if you build it, they will come, Field of Dreams reference. Venture capitalists think that many companies that get a lot of subscribers will be able to generate revenue from the subs in the future. And so the primary driver for Facebook and Instagram has always been the number of subscribers they have. And as elusive as it sounds, many VCs really don't care about revenue initially, as they are laser focused on the growth of subs. And this is fascinating. When Evan Spiegel, the co-founder of Snapchat, was initially raising money from venture capitalists, some early and not so young VCs, they thought this: hey, why would I invest in a company that makes a product that deletes pictures I took? I don't get it. And then once the same venture capitalists saw Snapchat's torrid subs growth, they thought, oh, this is so groovy and dope at the same time because this is the best business model ever. Okay, now, in order to understand subs with internet companies, we don't only look at the growth of subscribers, we also analyze what is referred to as MAU and DAU, M-A-U and D-A-U. And MAU stands for monthly active users, and DAU, D-A-U, stands for daily active users. And if MAU and DAU, that rhymed, if MAU and DAU are increasing quickly, then internet investors get really excited as they think that revenue growth will be attractive if it isn't already. And this begs the question of what is the rate of change of revenue for pre-IPO versus post-IPO companies. This is important. So generally speaking, venture capitalists love to invest in companies with accelerating revenue growth. Okay, revenue growth is accelerating. Now, once growth is positive but decelerating, then they often call their investment banking friends to take the company public. Yes, almost all publicly traded companies have decelerating organic revenue growth because they are often much bigger than private companies. And this is why investment banks make a lot of money, not only on IPOs, but also on mergers and acquisitions. Okay, let's now talk about drivers for healthcare. So biotech companies' primary revenue driver can be the Food and Drug Administration, meaning the FDA, can be the Food and Drug Administration government approval of a brand new drug, or what stage a biotech company's clinical trials are at, meaning how close are they to getting potential FDA approval. And other healthcare and financial services companies' primary revenue drivers can also be government deregulation. And for many financial services companies, we also look at the change in interest rates, as well as housing starts, and how robust the financial markets are. Now, when it comes to insurance companies, which is a subset of financial services, adverse weather conditions can lead to accelerating organic revenue growth because many consumers actually sign up for insurance after materially adverse weather conditions. Let's talk about hotels quickly. So hotel companies like Marriott's primary revenue driver can be revenue per available room, which stands for RevPAR, revenue per available room. And instead of giving a hotel company credit for opening many hotels, which can be a debt burden, we often focus on the year-over-year organic revenue growth rate of RevPAR, revenue per available room. So, for example, RevPAR can grow with the addition of selling Wi-Fi passes to guests or installing a mini fridge in hotel rooms, etc. Let's talk about industrial company drivers quickly. Industrial companies like Caterpillar, ticker CAT, and capital goods companies' primary revenue driver can be GDP growth. And industrials tend to be very cyclical, meaning their revenue materially rises or falls based on domestic and global GDP growth. And industrial companies often lose a ton of money during recessions, which is why we tend to value many companies based not only on earnings expectations in the long run, but often based on revenue multiples. Now, commodity companies' primary revenue driver is the price of the commodity and the volume of that commodity that they're selling. And if in doubt, if you're not sure what the revenue driver is for a sector, what I tend to do is I love investing in companies where both prices and volume are increasing. And of course, we have to be mindful of increasing input prices and inflation. Okay, now, what is the best long-term driver of revenue and net income growth? Well, in my humble opinion, in the long run, a company's organic revenue growth and its profitability prospects are much higher if the company is obsessed with customer service. And I believe that small companies can beat big companies when it comes to customer service. And Jeff Bezos and I believe that in the long run, a company's organic revenue growth prospects are highly correlated with the quality of a company's customer service, to the extent that I sometimes think that a company is only as good as its customer service. All right, let's talk about how companies often forecast sales. And remember, sales and revenue is the same thing, which goes at the top of the income statement. And when we discuss forecasting sales, it's crucial to understand this, because when we forecast financial statements, a primary driver of the success of any company is, of course, revenue. And Estee Lauder once said, "I've never worked a day in my life without selling. If I believe in something, I sell it, and I sell it hard." And salespeople that work at a company and sell directly to customers are part of a direct sales force. However, companies that only sell directly to their customers are really missing out on getting customers that they don't have relationships within other countries or in remote parts of the country that they're based in. So in this case, companies often look to leverage indirect sales channels. And every industry has their own indirect sales channels. In the industrial sector, companies often sell their products through Grainger or Fastenal, tickers GWW and FAST, respectively. And in the computer industry, companies often sell their products through Best Buy, ticker BBY. Now, direct sales are often much more profitable than indirect sales. However, not having an indirect sales strategy often leads to a lot of missed revenue opportunities. Now, companies often have direct sales structures focused on geographic regions and or verticals. Verticals meaning different industries such as government, or they focus on really large clients called named accounts. Now, when larger companies have massive customers that often comprise more than 10% of revenue, then the CFO or the head of sales often assigns a single salesperson to a handful of accounts, which is referred to as named accounts. And having customers that account for more than 10% of revenue is really common for early stage companies. However, for large publicly traded companies, this is a material risk, as too much exposure to one customer is commensurate or similar to, owning a portfolio with only a handful of stocks. And John Nesbitt, who is the best-selling author of Megatrends, once said, "The most reliable way to forecast the future is to try and understand the present." And CFOs and or heads of sales, they often set quarterly quotas for their salespeople. And larger companies have sophisticated software and cloud-based products to manage the sales process from companies like Salesforce, Oracle, and SAP. And those aforementioned three companies also offer other products as part of an enterprise resource planning suite, or ERP, an ERP suite that can manage all customer-driven aspects of their business, like customer relationship management, human resources procurement, financial statement preparation, etc. And just think of ERPs as the equivalent of Microsoft Office for the whole corporation. Now, smaller companies often use spreadsheets to manage revenue quotas and the profitability metrics of meeting or missing or beating their internal revenue growth expectations. And companies often probability weight the chances of salespeople meeting their quota based on how much they've beaten, met, or missed past quarterly quota expectations. So in summary, let me wrap this up. 5 things. Number 1, accounting is a science that is based on what has occurred in the past, and it's not driven by assumptions. Number 2, finance is more of an art, and it's based on what might occur in the future, and it is based on many assumptions. Number 3, or threeth, as my son used to say, revenue, which is also called sales or the top line, is a primary driver of financial statements. Number 4, different verticals, for example, industries like the retail sector, have different organic revenue drivers. And lastly, number 5, when CFOs and or heads of sales forecast revenue, It can be based on vertical and or geographic or named accounts quotas forecasts for their salespeople that they manage. Okay, I will now answer your questions after I take a very, very short break. And while I'm taking this short break, here's a short video I created for you on corporate bullies that I'm very proud of making because I was bullied years ago when I worked at several corporations. I'll be right back. Thank you. If you bully people at work, meaning if you're a corporate bully, then I want you to keep watching this. Otherwise, don't watch the rest of this vlog. It's going to be out there today. But for you, the corporate bully, I want to thank you. I want to thank you for being such a jerk. And by the way, you peaked in high school and you're so insecure that you treat people poorly. I get it. I get it. You're really insecure. I understand. But you know what? In a bizarre way, and I think what you've done at work, treating people poorly, is disgusting. But I think in a bizarre way, I want to thank you because you've motivated the people that you've treated poorly to quit and to join another company, or you've motivated them to start their own companies. You see, frustration in business can be a beautiful thing. And I say it with love in my heart, because if you're frustrated at work because you're being treated poorly, and I've been treated poorly many times before, then that forces you to get outside your comfort zone and get a better job, or better yet, start your own company. If I can be resourceful in any way, helping you start your own company, please let me know. Thank you. Not the bullies, just the people who are being bullied, like I was. Thank you. All right, thank you for letting me take a break. It's Thursday, so my neighbor's doing construction in his backyard. When I started off doing these weekly calls, every single Thursday during this call, he would do construction. Drove me nuts. So I'll turn on the AC here, and I'm going to sit down, actually. Give me a second. All right, I usually don't sit. I had about 3 hours sleep last night. I feel great, though. I feel really good. So I'm going to answer your questions to start by sitting down. All right, let me kick it off with Ginny. Ginny, how are you? Ginny graduated from my MBA degree program a couple of years ago. Good to see you. She's from Vietnam originally, and I think you live in Australia now. And so Ginny wrote about Renaissance write-up, meaning the one-page write-up. Yeah, Renaissance is the most successful hedge fund in history. They've had a 60% gross adjusted return on average since the 1980s, founded by a guy named Jim Simmons who used to work at the National Security Agency, a math whiz. So about Renaissance write-up. I was thinking of a portfolio analyst view with one-pagers. The then analytics, also short ideas taken from Barron's. What do you think? Yeah, and when you write it up, let me see it. I'm happy to take a look and review it for you during the gold and platinum office hours every Thursday, or here if you want to. Yeah, I'm here to help. All right, next up, and I hope you guys can hear me okay. Let me actually lower this microphone a bit. There we go. Sorry about that. All right. Next up, Ginny wrote, when I'm in Toronto studying a Master's of Data Science at University of Toronto, you mentioned before, I want to be a teaching assistant. How do you think I can best position myself to be a TA in U of T? Thanks. Yeah. So remember 2 years ago, we had a one-on-one meeting on Zoom, and I told you about that woman, Vanguard, who's also from Vietnam. She went to University of Toronto MBA school, and she works in asset management in Toronto. Send her a LinkedIn email, and I guarantee you she'll set up a call with you or meet with you in person. Yeah. Okay. And then next up, I also want to promote my personal branding by doing a business plan on 365 digital marketing to generate multiple revenues. How do you suggest I start? Should I model against Gary V? Yeah. So what I recommend doing is in the third semester of the MBA program, there's the venture capital bootcamp. So I would revisit E3-1 through E3-5 to write your business plan. And I'm always here to humbly help you if you have questions about the business plan. Yeah. Okay. And then you wrote here, after studying for a Master's of Data Science, I want to start a PhD which stands for Plumbing, Heating, and Dishwashing. I think, sorry, or Pizza Hut delivery. Yeah. I want to start a PhD to migrate under highly skilled immigration to the States. And I want Professor Aswath Damodaran to guide me. How should I position myself? Yeah. For those of you not familiar with Damodaran, he is the best finance professor on the planet. He works at NYU. And when I used to work at Citadel, I had a half-hour one-on-one meeting with Ken Griffin, the founder of Citadel, in his office in Chicago. And whenever I meet with somebody more successful than me, which is basically every meeting ever, what I do is I look at their bookshelf if they still have physical books. And after I leave, on the elevator ride down, I always order those books. And the only finance books he had on his bookshelf were from Damodaran. Yeah. So tell you what, let's set up a meeting together, and I'll come up with some creative ways for you to get in front of Damodaran. Yeah. Okay. Next up, how should I go about looking for scholarships for a PhD in data science and finance? Yeah. So I always recommend getting in first. And then after you submit your application, or while you submit your application, then look into scholarships. Yeah. And again, during the gold and platinum office hours today, let me know if you want. What I can do is I can come up with ideas on how you can get a scholarship. Yeah. Okay. And then next up, we've got over LinkedIn, there's about 600 employees from Renaissance, the hedge fund. And I think I've covered about 200 so far. Wow. Emails and in-mails. Very determined to get in. I love it. I love it. And if you don't get responses, please let me know. Now, if anybody is curious how to set up, how to network and get meetings with anybody, then what you can do is you can go to my website, which is harounmba.com. And you can scroll down to the bottom of it. Please load. You can scroll down to the bottom of it, and you'll see here a link to download my book right here. It's free. It's called Networking to Get Customers, a Job, or Anything You Want. Okay. Feels weird sitting down, man. All right. Hope you guys don't mind. All right. Okay. All right. And then Ginny wrote, after the degree in data science, I was hoping to get into wealth management side of Goldman Sachs in Canada first before working on the PhD, then moving to the US. How should I position myself? Thanks. Yeah, let me know later on today and I'll help you out. I know the president of Goldman Sachs Canada. I could probably help you out there. Yeah. Okay. And then you wrote, paraphrasing my question, sure. How should I position myself to get into wealth management at Goldman Sachs? Thanks. Just set up a ton of informational meetings. And for all of you that work in finance or want to work in finance, I think the best job you can possibly get at any investment bank or large bank is working in private wealth management, which stands for PWM. And the reason I say that is because it's the only job where you can actually take your clients with you anytime you want to leave, right? There really aren't NDAs in place. You can't do that in any other sector in finance. Yeah. It's tough working in private wealth management initially, Ginny. You're not going to make that much right away. You're going to have to be selling, networking like crazy. And I know you're great at that. But eventually in the long run, if you're long-term focused, you'll do extraordinarily well. Yeah. And the way they get paid is based on assets under management. So the average PWM or private wealth management firm or subsidiary at an investment bank, they charge a 1% fee on assets. So if they manage $1 million for a client, they'll get 10 grand every year. Yeah. And the best ones have billions in assets under management. Yeah. Okay. All right. And then you wrote, should I adjust my LinkedIn profile? Yeah. Tell you what, during the gold and platinum call today, and you're always welcome to ask questions here too, please don't get me wrong, but during the gold and platinum call today at 11:20, we'll do a Zoom and I'll go through your entire LinkedIn profile and humbly help you. Yeah. Thank you. All right, next up we have Renveer, who's a Silver MBA student from Mauritius. Hope you're doing well. Hope your networking strategy is going well. Congratulations on meeting the CEO of that real estate company 2 weeks ago at the shareholder meeting. And that's the best way for anybody to meet a CEO is you go to shareholder meetings. And Renveer from Mauritius did this last week. So when you go to these shareholder meetings, what you do is at the end of the meeting, and anybody can go. At the end of the meeting, you go up and talk to the CEO or CFO or CMO or any C-level executive because they're going to give you the time of day. And they won't leave that room until everybody leaves because their investors are there watching and board members are there watching as well. Some of my best contacts in business I got from going to shareholder meetings. Anybody can do it. It's really, really easy. Yeah. Okay. And you got nothing to lose either by going to these shareholder meetings, right? Okay. And Renveer said, how are you doing? I'm doing great, man. Hope you're doing well. And then you wrote here, if we already have an event calendar, such as the FOMC meeting, which means a Federal Open Market Committee meeting. So the FOMC, it's a group, I think 7 board governors that report to the head of the Federal Reserve. And they determine interest rates. Okay, so if we already have event calendars such as an FOMC meeting, minutes, etc., why don't people just buy straddles and close them on the day of the event? It all depends on how expensive vol is, right? So you have to price it. And most people that make money in options are the ones that underwrite them or sell them, right? The buyers usually don't make as much money because they're usually not as sophisticated. But it's really tough to do on a short-term basis because nobody can call the markets from one day to the next. Otherwise, you get fooled by randomness. It's impossible to do so. Yeah. And if you want to ask more questions about straddles, etc., let me know. And during the Silver office hours today at 10 a.m., if you want, what we can do is I can show you how to structure it on Thinkorswim. Yeah. And for those of you not familiar with the FOMC minutes, what happens is that the Federal Reserve, it feels weird saying, man. The Federal Reserve, what they do is every month or so, they release minutes. And all it is just a transcript of their most recent meeting. And what people do is they scrutinize every word. And what I used to do, and what a lot of fixed income investors do as well, is they use Microsoft Word to compare an old document to a new one. And they look for changes in the language, not numbers. So I used to do that with 10Ks and 10Qs to see what new risks come up. So for the Federal Reserve, when they release their minutes, if the wording changed from the last minutes to this minutes slightly, for example, like people freak out. So if the wording changed from before, we are somewhat worried about inflation to we are very worried about inflation, then the market freaks out. Okay. All right, next up, Andre. Hey, Andre, how are you, man? Good to see you, bud. You wrote, congratulations on the 220th videos. I've been watching you since episode 195. Thank you. And we're coming up on our 5th year anniversary for doing this weekly webcast. Surreal. Yeah, it's been fun. All right, next up we have Ya, who's in my Gold MBA program from Colorado. Great to see you. Ya wrote, can having a large cash balance infer that a company is being mismanaged, which may spark a private equity's interest? If so, why? Yeah. So what usually happens is companies grow very quickly, and those are categorized as growth companies, like post-IPO. And then after a while, growth slows. It's just the law of large numbers, and you can't grow that much anymore. And so what happens is growth investors don't want to buy the stock anymore. But value investors who buy cheap stuff don't want to buy it yet either because it's not cheap enough. And so what happens, and never, ever, ever invest in a company that's stuck between growth and value, because there aren't that many investors that are classified in the middle, meaning growth at a reasonable price. And if you invest in a company that is transitioning from growth to value, it's probably going to be dead money for like a decade or so. And the only way to truncate the transition, from growth to value is if a private equity firm or a hedge fund activist investor like Carl Icahn gets involved. And Carl Icahn joins the board of the company by buying a lot of shares. And sometimes he'll push the CEO out and restructure the company in order to unlock shareholder value. Now, tech stocks, or high growth companies that are tech stocks, I should say, usually when they have a lot of cash, they make acquisitions. Or what they do is sometimes they'll buy back shares if the stock is very, very cheap. If you're a value company, you might do a bigger share buyback. You certainly won't do massive acquisitions as much. And you might increase the dividend as well. Yeah. I hope I answered your question. If it didn't, please let me know. Thanks. And if you guys want want to watch a great movie on private equity, there's a movie called Other People's Money, or OPM, with Danny DeVito. It's an oldie but a goodie. Yeah, I should do a video on that one. Yeah. Okay. And then next up, Ya wrote, what are your thoughts? Hold on a second. It skipped on me. I hate when it does this. It's not your fault. It's me. It's not you. It's me. Like my Spanish girlfriend years ago. She said, I want some space. Yeah. Too much information. Okay. It's early. All right. Next up, Ya wrote, what are your thoughts about Instagram now charging subscription for verifications? I think it's wonderful, and I'm livid, really upset with Facebook and Instagram. I'm really upset because people are pretending to be me, and what happens is they try to scam, some of my viewers or students or followers by saying they're me. Would you like to invest cryptocurrencies with me? And I keep sending messages to Instagram with a picture of my damn passport, and they don't take them down. But I'm very blessed. I have a very good friend that works at Instagram. And what she does is the second I see somebody pretend to be me, she takes that person account down. If you ever get contacted by somebody with my name asking you for money or cryptos, obviously it's not me. It's not me. I think it's a great idea, though, that Instagram is doing this. They're basically following what Elon Musk did with Twitter. And I don't mind paying for verification, $10 a month or whatever it is, so that my students don't get scammed. Yeah. Now, Facebook and Instagram, they're beta testing this right now in New Zealand and Australia. And hopefully they'll deploy it globally at some point. And I'll be the first person to sign up. Yeah. Okay, cool. And by the way, if you go to Udemy's Instagram and just click on the circle at the top there, the Udemy logo, I'm taking over their Instagram story. And I'm going to be answering a lot of questions about how to get jobs and all that stuff. So if you want, go to Udemy's Instagram profile, click on the Udemy logo there. And then what you can do is just type questions. Yeah. Okay. All right. Next up, do you know if we have to pay taxes if we sell stocks and quickly use the money to buy other stocks? Yeah. Only if you made money on that stock that you sold. Now, most countries try to reward you for being patient and long-term focused to the extent that you pay less taxes if you own stocks for more than 1 year and you sell them then. And that's basically a capital gains tax incentive to holding stocks longer. Now, even if you did make money on a stock and you sell it, you still might not pay taxes. You might not pay taxes if you lost a certain amount of money the previous year. And that's called a tax loss carry forward. And please don't ever do your own taxes. And this goes to everybody on this call. Doing your own taxes is like doing surgery on yourself. It is really hard to understand the tax code. And I promise you, good accountants will get you money or tax breaks or whatever it is, or keep you within the confines of the law. Now, if you run your own business like I do, try to have the same accountant do your personal and your business taxes as well. Yeah. And the best way to find an accountant, there's no Yelp for accountants, right? The best way to find an accountant, a good one, is to ask your successful friends, aunts, uncles, whatever it is, if they can recommend an accountant to you. And I know you're based in Colorado in the United States. Please do it as soon as you can if you don't have an accountant, because taxes are due on April 15th. Yeah. And April 30th in Canada. Okay. Next up, Manas wrote, good morning, my dear mentor. What a wonderful day for all. Great to see you. You wrote, how are you doing today? And how are things going on in general? Things are great, man. Things are great. I couldn't sleep. I got up at like 2. And I was excited. And that's how you know you found your passion. When you're sleeping and you look at the clock and you don't say, oh, it's too good, I can sleep more. You say, oh, good, I want to get up and work. I love it. Yeah. But my Oura ring told me, hey, careful today, right? Because my heart is irregular because I didn't sleep much. That's why I'm sitting right now. Yeah. Which I don't like. But anyway. Okay. All right, next up, Manas wrote, by the way, did you try Chole Bhature? It's heaven on earth. Yeah, I remember you mentioned that last week. It's so funny because I took a picture of that, remember? And I showed the guy at the restaurant, the Indian restaurant. He said they only have it at lunch. And my wife and I went there for dinner last Friday. So I got 2 orders of the Bollywood dosa, which was dope on a rope. It was good. Yeah. Okay. Next up, I've got Vismay who wrote, hi, Chris. I'm currently looking for a job in the finance sector. And I had a startup, but eventually things didn't go my way and I had to exit. So can I add that startup expertise of mine on my resume? Yeah, you can. If it was just a month, you don't have to disclose it. If it was more than a year, you probably do have to disclose it. And of course, if the company does a background check, you have to completely disclose that as well. Yeah. But what I would do is I'd articulate what you learned from that startup, right? In terms of multitasking, etc. Yeah. And if it was a failed startup, I don't know if it was, but that's a badge of honor. There's nothing wrong with that. Yeah, you only have to be right in business one time. And every great entrepreneur here in the Valley and globally has failed many, many times. But we don't hear about those failures. Yeah, it's a badge of honor. And good for you for trying. I love it. Okay. Next up, Abel wrote, hi, Chris. Abel, I hope all is well. Likewise. How can I create an exception system on Excel spreadsheet for my company? Yeah. So what you want to do is you want to type exception.message. So, and that would be as follows. And you do some VBA, of course. Exception, open brackets, config, and then open brackets again, your named variable, and then dot, I think it was dot toString at the end. Yeah, hopefully that makes sense. Okay. All right. And I do teach Excel as well as, and I have a course on Excel now as well on my website, which everybody gets for free in my MBA program. I teach you how to program as well. Okay, next up we got Ankit who wrote, hi Chris, what are your views on Adani stocks? Yeah, so you're talking about Adani Enterprises in India. Yeah, so it's a big conglomerate founded, I think, by Gautam Adani back in the 1980s. I'm not a big fan of, and I know the market cap's gone up from 100 billion to 200 billion pretty quickly. I'm not a big fan of investing in conglomerates like, Tata Group or Reliance, whatever it is. Only because it's hard to value them. They have so many different sectors. I'm more into pure plays. And I know that stock has done well, but a big trend that's emerging right now in the markets and has been for the past decade is big conglomerates like United Technologies, General Electric, et cetera, breaking up into smaller companies. Yeah. Okay. All right. Next up, Cheyenne wrote, you wrote, for example, I don't see the first part of your message. Yeah. By the way, if you put it in a hyperlink, YouTube strips it out so I don't see. But you wrote, for example, is the course material any different from silver compared to gold or platinum? Okay. Yeah. I think I answered that. Yeah, sure. So if you go to, sorry, my back's kind of sore. If you go to learn.harounventures.com, you can learn more about it here. Or if you want to see a table, just go to HarounMBA.com, my website here. And then you can scroll down. And then right here, you'll see the difference between the three programs. Silver, you can start today. It's like Netflix. You got, I think it's over 400 hours now. And then gold is the same thing as silver, except what happens is I teach the classes live and just do Q&A. And then platinum is the same as gold, except you also get 9 one-on-one meetings with me, confidential one-on-ones where I help you with your LinkedIn profile, etc. Now, the next gold and platinum program I'm going to be launching maybe this April. I'm not sure yet, but you can start silver now. And if you sign up for silver, you get a big discount as well if you wanted to upgrade. Okay, give me 1 second. Here we go. All right. All right. And then next up, I'm really enjoying Bono's audiobook, Surrender. I'm at chapter 10, October. Thanks for the tip. You're most welcome. I just finished it actually last week. It's good. Bono actually narrates the whole thing. He's self-deprecating. He's funny. He's poetic as well. And he plays a lot of the U2 songs as well. I really enjoyed it. Yeah. Okay. Next up, we got Manas, who wrote, what if Binance, the biggest cryptocurrency exchange in the world, what if Binance fails because the United States government is targeting its stablecoin, BUSD? What if a disaster strikes and it's game over for cryptos and all of that? So, and then you wrote, by the way, a Tencent backed off metaverse hype as of now. No, I think Tencent is going to be redistributing or reselling as an exclusive contract with Facebook to sell metaverse products in China, maybe. So in terms of cryptocurrencies, and I've been saying this for a long time with love in my heart, I don't want anybody to leave your cryptocurrencies in a hot wallet, meaning online in an exchange. I always want you to store them on a cold storage wallet from a company like Ledger Nano or Trezor. And don't ever buy those aforementioned two wallets from Amazon. Buy it directly from the source, even though it's more expensive, because that way they're not tampered with. Yeah. But I don't think the entire crypto market is going to go away. I think there'll always be a market for it. I just think, and I've always said that 95% of cryptos are scams. Yeah. And if you're going to invest in cryptocurrencies, please never, never, never have more than 5% of your liquid net worth in cryptos, and don't have more than 0.5% of your liquid net worth in any one crypto. Just be careful. Okay. Regulation is coming, which is a good thing, but not too much regulation. And then next up, why are you not doing YouTube anymore? We want your channel to grow like grass that never stops growing, no matter what. Why are you not making videos? It's been months. No, thank you. So a couple things. Number one, I have a key employee who's been away for a couple months. He just came back, thank God. Number two, I felt that I had so many questions that people asked me over the years, and I felt that it didn't seem right to repurpose what's on this weekly webcast. It's just duplicative, right? I don't know if that's a word, but you know what I'm getting at. Yeah. So our new strategy now is to only release very high quality vlogs, like the series Wall Street Pro reacts to billions. Let me go to my YouTube channel and I'll show you right here. Yeah. So if you go to my YouTube channel, the strategy now is this, right? Really well thought out vlogs. And I've got to show you the first 5 seconds of this because it's so ridiculous. Oh, no, not this one. Hold on. You guys are going to laugh at me, not with me. Watch this. Let's talk about finance. Okay. So anyway, that's my new strategy. Yeah. Okay. But I'm doing a hell of a lot of stuff every single day now on TikTok. So if you want to watch the daily things from me, go to TikTok or Instagram. Yeah. Okay. All right. And then you wrote here, Russia backed off a nuclear deal with America. Now it can test and launch as much nukes as possible. What's next? Are we moving towards a nuclear winter, like a dead zone for long? Now, so during the previous Cold War, the United States always knew that Russia was rational, right? It would be mutual destruction if the United States or Russia were to attack. So I wouldn't be too worried about that. I wouldn't be too worried. What is a little bit worrisome though is United States is, I think they're going to add another 100 troops or increase the number of troops from 30 to 100 in Taiwan. Hopefully nothing happens there. And then it looks like South Africa is now partnering with China and Russia with testing of marine-based warfare. What's up with that? I was surprised at that. Yeah, and even with China has tens of thousands of troops now at the border of India. I don't know what's happening. Is it intimidation? I just don't get it. I just don't get it. And I was reading in the Washington Post yesterday that it feels like the whole world is against Putin. I certainly am. But only 33% of countries have economic sanctions against Russia. And it feels like it's just North America and Europe and Australia and Japan against Russia. And everybody else is kind of laissez-faire. We live in interesting times. Yeah. God forbid nothing happens. I don't think anything will happen. Yeah. Okay. And then next up, Meta actually introduced a subscription model for its product. Yeah. Like $12.99 and $14.99 per month. Is it fair? And if yes, will it affect growth? Will it bring a new blockchain social media company? Yeah. Yeah. And I think that's similar to the question somebody asked earlier about a Meta subscription plan for verification. I think it's a smart idea. And I think it had to be done. It had to be done. And I've seen so many people try to be me and scam other people. It's getting out of hand. Yeah. And if you want more, watch a video on how I caught a cryptocurrency thief. Just do a search on my YouTube channel on cryptocurrency scammer. I got the police involved in everything. And I caught the guy. And I showed you the entire dialogue I had with the person, and I let him go. I told him I turned the other cheek. Yeah. Okay. All right. And then next up, there's an educational company in India, as evil as the devil. Oof. They started well, but then they started tricking parents and students, and now they're losing billions. Now it's worth to research on. Yeah. Ugh. Yeah. Brutal. It's hard to have business models when you're trying to when you're trying to target younger people, because usually you have to go through parents. And the good thing about YouTube now is they have a lot of child protection services in place, which is awesome. TikTok does not, and they need to implement something like that. It's with my kids, it's bizarre, man. Like I see my kids using TikTok, and they're suggestive women in like half naked in these things. I'm like, this is terrible. I wish there was some kind of way that we could, I don't know, like have a rating system, or at least block that crap. Yeah. And TikTok, there's racist stuff on it as well. It's terrible. They should screen for that and just get rid of it. Yeah. Okay. And then Manas wrote, are Facebook ads worth it? Like, what's the ROI? And is it worth the time and effort? Yeah. Of all the major platforms, Facebook is the absolute best to advertise on. Don't waste your time with YouTube. That's right. Facebook is the best. Yeah. And Facebook, so 40% of people on this planet use at least one Facebook app every month. Of course, that includes Insta and WhatsApp. And the return on investment is amazing. So my chief marketing officer, Cassandra Cox from Cox Media, she ran a campaign recently for us using Facebook. And for every $1 she spent, we made $40. So it's great. Don't waste your time with YouTube ads. Yeah. All right. Next up, I've got Hijratullah. First time I've seen you. Welcome to the call. I hope you join us again. Hello, teacher, you wrote. I'm your classic MBA student. Hey there. And currently, I want to work on financial models, but I have no idea from where I should start. Is your MBA class cover the prep of financial models and details? Oh yeah, we go into a hell of a lot of detail. And you can sign up today to do the Silver MBA if you want. Just go to HarounMBA.com, and there's a 30-day 100% money back guarantee. So you can take all the finance classes and just get your money back if you want. But I guarantee you're going to learn more from my program in terms of practical stuff than you will from theoretical business schools, or your money back. Yeah. Okay. And then Manas wrote, Vivek Ramaswamy is willing to run for 2020 for office. What's your thoughts on this, if anything? I'm so sorry, I don't know who Vivek is. Yeah. And then we got Makiri wrote, hey Chris, what are the best websites to find a company's fundamentals, and what should we primarily look for? Sales, debt, etc. Yeah. So what I recommend doing is looking for organic revenue growth, as I mentioned earlier today, depending on the driver and which sector it is. If you want to tell me the name of the company, I can tell you in real time what the driver is. And then the main sources for your research are going to be, number one, SEC.gov, which is where all companies listed on the major markets in the US have to post annual reports, quarterly reports, and 8Ks, which means a press release which has material information in it, like earnings. If you're not investing in US companies, you can go to the government website that monitors and oversees the exchange in that country and get access to the annual report, etc. The second thing I would look at is investor relations. Every publicly traded company, or almost all of them, have an investor relations department, and the job of the IR folks, or investor relations, is to help you and all investors understand stocks. And they have a plethora of information on an investor relations website. So just do a search for investor relations and then the name of the company. Yeah. Those are the primary sources. Yeah. Don't rely on anybody telling you what to buy, please. If you watch CNBC or any of these programs and somebody is interviewed, like a fund manager from a mutual fund or a hedge fund, don't listen to them because they're biased. It's not a conspiracy, and they're not being unethical. They're just going to be biased because they're going to talk about stocks they own or they're short. Always do your own research, because nobody is smarter than you. I really believe that. Always do your own research. And Warren Buffett said, if you're not willing to own a stock for 10 years, then there's no point in investing. The longer the view, the wiser the intention. Always. Yeah. And it'll help you stomach volatility as well. All right. Okay, next up, but what I would do is, if you're going to look at companies, and in my MBA program, I provide you with all the templates you need to invest in companies. One of them is a 100-step process where we look at, number one, fundamentals, number two, valuation, and then a distant third, a little bit, is technical analysis, just a little bit. Okay, Eric. Hey, Eric. Eric is from Sarasota, one of my gold students, upgraded from silver to gold. He wrote, how do you approach a company to fund or provide a letter of intent to purchase a product or a service? Yeah. When it comes to legal stuff like that, what I recommend doing is go to LegalZoom.com. I'm not sponsored by anybody. I will never monetize my channel, but just go to LegalZoom.com. They're great. And I wouldn't waste your time talking to mid or entry-level management. I would go right to the top. And what I recommend doing maybe is going to shareholder meetings, kind of like Ren Veer from Mauritius did recently, and meet with the CEO there. You got nothing to lose. And the CEO, if they can't help you, they're not going to be useless. They're going to tell you, well, perhaps you can talk to, I don't know, Jack Smith in our operations department. And then you can send Jack Smith an email or a LinkedIn message saying, yeah, I just met with your CEO and she said that I can reach out to you regarding this. Yeah. All right. And then Ren Veer from Mauritius wrote, people like Paul Tudor Jones, yeah, great hedge fund investor, and Michael Burry, also a great hedge fund investor on the long and short side, are known to have bet against the market. Since we can't time the market, how can someone place such bets? Do we place small bets on a regular basis? Yeah. I would say that, well, Michael Burry is great in the long and short side. You know, Paul Tudor Jones tends to do a lot. He's great. He tends to do a lot better on the long side. But what I would do is don't place small bets on a regular basis. I would do more concentrated bets, but think longer term. Yeah. Always think long term, because that way you won't lose sleep over volatility. You know, you tell yourself, I don't know the path, but I know the destination. I got to get a prop here. Wearing my Lululemon pants, which I love. Canadian company represent. So Warren Buffett was interviewed recently, and he said that when Coca-Cola went public in like 1919 or whatever it was, if you'd bought shares of Coke on day one, you'd have lost 50% of your money 1 year later. But that doesn't matter, because if you held longer term, you'd have made a fortune. You have to be really long-term focused to stomach the volatility. And never buy a stock because you think you can make 10 or 15%. I love to invest in companies that I think are a 5x5, meaning a 500% return within 5 years. Am I wrong? Most of the time. But if I have high conviction that a stock is going to go up that much, usually I make money on it. Yeah. Okay. And Ginny, you're most welcome. Next up, we got Kyle. Hey, Kyle. Kyle wrote, what are your thoughts about a recession being called later this year or early next year? It looks inevitable at this point. So if you look at the yield curve, I'm happy to go through it in a lot of detail with you guys. Just say yes, and I'll teach you about the yield curve if you're curious. But the yield curve, which basically tells you what are short-term and long-term interest rates, the yield curve is now inverted, which means rates are higher today and lower in 30 years. And what that means is the market expects a recession in the future. Because when there's a recession, government cuts interest rates. A normal yield curve looks like this, but right now it's inverted. And usually, almost always, whenever the yield curve is that inverted like it is now, it signals that a recession is coming. Now, when the Federal Reserve raises interest rates, it doesn't impact consumer spending and the economy right away. It can take 12 to 18 months. And that's one of the reasons why the Federal Reserve has been taking their foot off the pedal a little bit in terms of raising rates. They went from raising 75 basis points per month last year to 50 basis points per month. Now it's 25 basis points per month. Yeah. A slowdown is coming, that's for sure. Yeah. But I'm amazed how resilient the U.S. economy is. Yeah. Especially unemployment, because unemployment is the biggest input, or pardon me, labor is the biggest input into inflation or making any product, the cost of labor. And if unemployment is low, it's 3.4% now. That means that we still have massive inflationary problems. You know, it's 6% and change. Not as bad as the United Kingdom, which is disastrous, at over 10% now. Yeah. But unemployment, the thing about unemployment that it's obfuscated by the fact that unemployment only measures people that are looking for work. A lot of people have kind of checked out, post the pandemic. There's this whole mentality, which is cool, of YOLO. YOLO, which stands for you only live once. A lot of people are kind of just, doing their own things. Yeah. It also doesn't really account for the side hustle economy. Yeah. Okay. Next up, Paul. Hey, Paul, how are you? Paul is one of my platinum students from Barcelona. Great to see you. I was in Barcelona a couple of years ago, and he gave me that wonderful Qatar shirt as well, which I wore recently on a webcast. Good to see you, buddy. So Paul wrote, hey, buddy, I hope you're doing great. Likewise. You wrote, I remember I read your 101 crucial lessons they don't teach you in BS, business school. Thank you. 2/3 of HBS is BS, Harvard Business School. Or maybe that's Haroun Business School. I don't know. And then you wrote, I read it some time ago, but I lost it. Do you remember if it was included in one of your courses? Yeah. It's actually included in the MBA degree program. Yeah. And what you can do is you can always do a search. I'll show you here. So if you go to my homepage, then you go here to Power Search, okay? What you can do is search on any topic here, like, I don't know, beta. And then what will happen is you'll see exactly where this comes up in the MBA degree program. So you select whatever program you're in, and then just scroll down. You'll be able to click on this to go immediately to the lecture. Yeah. Don't buy the book, please. It's free for you. Yeah. And also, I just finished writing a book for McGraw Hill. I signed a contract with them called Finance Essentials. And I sent them the manuscript. They're editing it now. It'll be out by November. I'm pretty excited about it. Yeah. And humble at the same time. Okay. And then Eric wrote, where'd you get the data on Coke? Yeah. So I just saw a Warren Buffett interview. That's all. Yeah. About the IPO. But you can always go to, it's ticker KO. Just go to sec.gov, enter ticker KO in the top right-hand corner, and you can access all the filings. And Warren Buffett, actually, he's been a shareholder in Coca-Cola since 1988. And he's publicly said many times he's never, ever selling it. And he still has about 7% of his portfolio in Coca-Cola. Yeah. Okay. And then Eric wrote, you wrote, what to take a shareholder means. Please rephrase so I can humbly answer. Thanks. Okay, next up we have Alex P. from Utah. Great to see you, man. Good to see you. You wrote, Chris, top of the morning. Good to see you. I just did a DNA test on Ancestry and really found it enlightening. My question to you is, how important is the work of genealogy to you? It's really important to me. I had my DNA sequenced a number of years ago to see what diseases I'm going to get later in life. It's like that movie Minority Report, the Steven Spielberg, Tom Cruise one. But instead of the pre-crime group determining what crimes you're going to commit, which is crazy, it's kind of like the pre-health group. So I know what health issues I'm going to have later in life. And when I got it done, the DNA test basically said you've got, I guess, 60 or 70% chance or something to get age-related macular degeneration, meaning my eyesight will go down. And I called my mom about it, and she was like, oh my God, honey, your grandfather, I miss you, Grandpa, your grandfather had that as well. And so what I do now is I take a relatively benign zinc substance every single day so that my eyesight doesn't go downhill when I'm older. Here it is right here. I get it from Amazon. I don't want to offer any health advice, so do your own research, please. Yeah. But I think it's really important to do it. And the pricing point has come down materially as well for DNA testing. I recommend everybody do it. And it told me it's hard for us to trace our roots. My dad's from Egypt, but Egyptians, what they do is your first name was your dad's last name. So it's hard to really trace your roots. And so we don't really know where we came from. But 23andMe said that there's a high probability that my family may be from the south of Italy. Yeah. And it also said I'm like 2% Neanderthal. Grr. Yeah. It's true. Okay. All right, next up, Yannick. Yannick wrote, hey, Chris, you say you look for the exit when the founder of a public company leaves. Yeah, in most cases, yes. What is your thought on Berkshire Hathaway? Yeah, when Warren Buffett will pass away, I'm a shareholder and I love the portfolio. Yeah, he's such a long-term investor that I don't think it's going to have, it'll have, the underlying stocks will probably still be good long-term investments. But the issue is if a lot of people redeem, like there's fund outflows, then that could cause pressure on all the stocks he owns. Yeah. So it's sad. He does have a succession plan. Of course, he and Charlie Munger are getting up there in age, and I love them to death. Yeah. Okay. And Eric wrote, how can a long carry a loss forward? Yeah. So if you lose money on a stock, let's say that you lose money on stocks in general in a given year, your accountant will be able to help you not pay as much taxes next year if you make money on stocks. And so a lot of tech companies, what they do is they lose a ton of money in the first couple of years, and then they don't pay taxes when they're profitable for a while. Because what they can do is they can have a net operating loss carry forward. And so I remember there's a company, Red Hat, ticker was RHAT on NASDAQ, and then RHT that IBM bought a couple of years ago. And I was a big investor in them. And they didn't pay taxes for years because of the net operating loss carry forwards. And they're in also North Carolina, Research Triangle, they got tax breaks. Yeah. And I know you're a Linux man. That's why I mentioned that. Okay. Next up, Makiri wrote, I know you discourage swing trading. Yes. What technical analysis tools helped you find growth stocks at Citadel? Yeah. So we had excellent risk management. I learned a ton working there. We didn't really focus as much on technical analysis. We focused on fundamentals and valuation. But when it came to putting in trades for my trader there, great guy, Matt, what he used to do was he would look at how overbought or oversold a company is. He'd also look at moving averages and support and resistance levels as well. Yeah. Okay. All right, next up, Ahmed wrote, hey, Chris, I recently launched a finance website targeting the Arab world. Cool. What would you recommend me to increase and engage with the audience? Hope you're doing great. Thank you. Yeah. So what I would do is I would start to vlog as soon as you can. I would obviously get on TikTok as well. Don't strive for perfection when you vlog either. Right? If you look at the early Gary Vaynerchuk vlogs or the early Marquise Brownlee, who's my favorite vlogger, vlogs, they weren't that polished. But you got to start somewhere. And as Salvador Dali said, if you strive for perfection, you'll never reach it. So what I would do is I would do what I do or used to do, which was I hold a weekly call, I still do, and I will forever, and then repurpose that content based on the questions people asked you into separate vlogs. So use Gary Vaynerchuk's manuscript in terms of creating content on one platform and then slicing it up and putting micro content on other platforms as well. Yeah. And you can use Hootsuite.com to help you with that as well. And they've got a free plan as well. Okay. All right. Oh, I love coffee. Dude, sometimes I'll go to bed and I'm like, I can't wait to get up to have my coffee. Okay. All right. Next up, Eric wrote, what is your opinion on the Templeton Fund versus Vanguard? Yeah, so Franklin Templeton has their headquarters here in San Mateo, half hour from where I live. They have a lot of great growth and value funds. It's more of a mutual fund though, whereas Vanguard offers ETFs. So I prefer Vanguard over every mutual fund on the planet because ETFs tend to outperform mutual funds and the fees are minuscule. For example, if you invested in their S&P 500 ETF, ticker VOO, if you invested in VOO, you only pay 3 pennies for every $100 that you invest per year. That's nothing. That's 0.03% fees versus S&P 500 mutual funds where the fees are several percent. And the taxes are higher because mutual fund managers are chasing performance. Remember earlier in today's call, I said that if you hold stocks for longer than a year, you pay less in taxes. Yeah. Okay. And then you wrote, could you show us how to buy TIPS, Treasury Inflation Protected Bonds? Yeah. So just type up TIPS and you can buy it. It's like a stock. But I think what's better than TIPS is if you go to treasurydirect.gov, okay, and you buy iSavings bonds there. And the yield is now 6.4-ish%, I think. And every 6 months it resets, every April 1st and November 1st. So if inflation gets worse, that will go up. If inflation gets better, that will go down, but you'll never lose money. There's a floor on it. And the reason why most people haven't heard of Treasury Direct is because it's only sold by the government. Hence the name. So you go to treasurydirect.gov, okay? And I recommend that you buy this, and I never recommend anything. Okay, so what you do here is you go to I savings bonds. So here it is here. I was wrong. I said 6.4, it's 6.89. That's pretty good. And every November 1st and April 30th, it resets. But I would look into this. I think the most you can do is 10K, but Congress wants to increase that to 20 or 30K. Yeah, no brainer. No brainer. I think you can only do it, though, if you're located or live in the U.S. I'm not sure. I bought it, and I'll continue to buy it. All right. Next up, my best boss ever, the orthodontist, I remember you told me about her, has a requirement of every new hire to read several Ken Blanchard books, Raving Fans, Gung Ho, and Whale Done. Very cool. He wrote the 1 Minute Manager as well as a book called Who Moved My Cheese, which I read years ago. Yeah. And then you wrote, I'm sure she has added to that list since I worked there. She immediately fired anyone who didn't conduct themselves according to the ideals in those books. I love and miss that place. Yeah, you should give her a call. Yeah, and I hope that call you had with that other agency went well yesterday morning. I hope you got through. Yeah, let me know during the gold and platinum call if you want. Yeah. Or offline. Yeah. Okay. And then Manas wrote, Adani stock fell 69 to 85 after January 24th Hindenburg report. It shook the Indian markets. I knew this would happen because their stock was horribly overvalued and the report crashed the market. Yeah. And I don't know of the accounting issues, but if you want to learn about accounting fraud and what to look for when coming up with shorts based on accounting, there's a great book called Financial Shenanigans by Howard Shillett, who's the founder of CIFRA, which is a forensic research accounting agency. And I used to be one of his clients when I worked in the hedge fund industry. He's great. Again, the book is called Financial Shenanigans. Look for patterns in the data. It's fun. And that's where you learn how to read financial statements like a good book. Yeah. Okay. Cheyenne wrote, sorry to hear you couldn't see the rest of my question, but thanks for answering regardless. You're most welcome. Yeah. There's certain words that when people type it in, also YouTube filters out. Yeah. Out of my control. And hyperlinks too. Next up, Renvir from Mauritius wrote, how do you think hedge funds are currently profiting from the war? Yeah. Eesh. Well, I'm sure a lot of hedge funds went massively long oil, but I'm sure some of them are getting their faces ripped off this year because natural gas prices are falling quite a bit. Yeah. Other than that, I don't really have any insight. Yeah. But I remember when I used to work, when I worked at Goldman, I remember after 9/11, the first thing we did was we looked to buy defense contractor companies, like Lockheed Martin, ticker LMT, or General Dynamics, ticker GD. Yeah, or Northrop Grumman makes ships, ticker NOC. And I'm sure those stocks are being picked at right now or looked over by hedge funds. Yeah. Okay. Hey, Marin, how are you? Marin is from Kenya, but lives in England. She's great. She started a company. She's one of my platinum students from years ago. She started a company that makes face cream. And I ordered it, as you know. I have it here in this box, shipped from you. And I'm going to open it when I interview you in March if you want to come on and do the interview. I'll unbox it and we'll take a look at your product together. Yeah. Good to see you. Yeah. And so Marin said, hey, Chris, and everyone, hope you're well. It's always good to see you. Okay. All right. Next up, we got Manas who wrote, thank you for everything, my mentor. God bless you. All forever and ever and ever. See you all next week and forever. And thank you very much for namaste. God bless you and all that stuff. Thank you. Always good to see you. Yeah. Okay. Next up, we got Makiri who wrote, Chris, please consider doing short educational tutorials like how-to videos on finance, stocks, and cryptos. Those videos do well to grow YouTube channels. Yeah. I've done a bunch of them. I'm God bless you. I appreciate the feedback. What I'm interested in now is just analyzing movies and TV shows. It's just fun for me. So what we're going to do is we're going to publish our next Wall Street Pro Reacts video, which is going to be Billions episode 2. And we might do every episode of Billions. I don't know. Yeah. We're going to do industry as well as Succession, which is the best show on TV. Yeah. All right. And then Makiri wrote, everyone, please hit the like button. Thank you for that. I appreciate it. We're at 17. Everybody, please click the like. Thank you. God bless you. Thanks. Matthew, how are you? Matthew's in my Platinum program. Great guy from Brantford, Ontario, the home of Wayne Gretzky. I wore this for you today, man. Hey, you miss 100% of the shots you don't take. And Wayne Gretzky once said, they asked him, why were you successful? And he humbly, because he's Canadian, he humbly said, I was successful, not because I skated to where the puck is, but rather because I skated to where the puck is going to be. And we have to have the same foresight as well when we invest. We want to buy stocks that investors are going to like. And that's why we look at catalyst-based investing. Yeah, great to see you. And Matt is an expert in SEO as well. And then Matt wrote, $1 spending, getting $40 return is insanely good. Yeah, it's incredible. And if you want, I can introduce you to my CMO, Cassandra Cox, who is in Montreal. She works her company, Cox Media. She's amazing. Yeah, she's great. Okay. Next up, Mike Flynn wrote, hey, Chris, can you please explain TIPS, how to invest in them and how they work? Yeah. So TIPS stands for Treasury Inflation Protected Securities. And basically what that means is you can invest in them. And if inflation goes up, what happens is they go up just as much, right? So if inflation spikes by 3%, they'll probably spike by at least 300 basis points as well. Hence the term Treasury Inflation Protected Securities. It's a government security. Yeah. Okay. But before you invest in those, if you're in the United States, I would look first at treasurydirect.gov to buy I-savings bonds. It's better tax mandate as well. Yeah, you do pay federal tax though on I-savings bonds. Yeah. Okay. Next up, we got Michael. Hey, Michael. Michael wrote, "Hey, Chris. Good afternoon from Scotland. Great to see you. How are you?" And I've got a little bit of Scottish in me. I've actually got Irish in me as well. And that's why I have green eyes, because my grandmother, thank you, Grandma, I miss you so much. And that's why I can't use green screen. I have to use blue behind me for doing blue screen. And people that have green eyes, actually, they have to wear contact lenses if they do green screen. Yeah. Good afternoon from Scotland. You wrote, is the Excel course included with the Silver MBA course? The Silver MBA course on the website shows a price of $4.99, but also has a price of $5.98 when enrolling. Yeah. So depending on what country you're in, Teachable always charges taxes. Okay. I don't get a penny of the tax ever. Okay. It goes directly to them. Yeah. There's a 30-day 100% money back guarantee. So if you pay $5.98 including taxes, I guess, you're going to get every penny back, including the tax. Yeah. And yes, it's included. And so what you do here is you go to, if you want, you go to HarounMBA.com and you click up here. Okay. And then once you're here, this is the link for all my MBA programs for where to access the Excel programming. And I teach everything about Excel as well. So you'd click this one here. And I'm not logged in here, but you'll be logged in and you'll be able to access it starting here. Yeah. Yeah. And I hope you enjoyed it. I poured my heart into that, man. I had a blast making it. And my next thing I'm working on now is to show you. I love to teach with props. So I'm putting together a complete economics course, which is going to teach you investing in bonds and everything. I've got fake gold bars here. These are just props. So I'm going to talk about the gold standard and all that stuff. And also I've got other props here. So there's two bits of medicine that the government uses to fix the economy. One is called fiscal policy, and the other one is called monetary policy. So I've got medicine kits. This will be monetary. This will be fiscal with tools in it. I'm still working on creating it right now. So anyway, it should be a lot of fun. Yeah. All right. And this here is just to talk about Department of Justice and stuff as well. The police thing. I'm like the village people. YMCA. Please tell me somebody gets that. Don't make me feel old, people. Yeah. All right. Ugh. Okay, and then we got Mike Flynn wrote, how much money do you need to invest in a hedge fund? Yeah, so the law stipulates in most countries that you have to have a liquid net worth of at least $1 million in order to invest in a hedge fund. And what happens is companies, okay, hedge funds by law, what they do is they have what are called subscription documents. So after you read the investor offering memorandum, and if you want to invest, you have to fill out subscription documents that are 10 to 20 pages that ask you questions like your net worth, and also there's anti-money laundering stuff in there as well. Post 9/11, given the Patriot Act, etc. Yeah. Okay. And then next up, question is, hey Chris, writing business proposals are included in the MBA program? Yeah. So they're included in the third semester in all the programs. Yeah, and I'll show you how to access it really quickly. So if you go to my website, harounmba.com, whoops, Harpoon, it's only my name. Okay, if you go here and you do a search for boot camp, you'll see it comes up. And depending on which program you're in, silver, gold, platinum, whatever, you can click here. And then you'll see Introduction to the Venture Capital Bootcamp right here. And if you buy silver, you can upgrade and get a big discount as well in the future. Yeah. And there's tons of lectures down here. Yeah. And if anybody's curious how I did that, I outsourced the search engine to a company called 360 Site Search in Germany. They've got a great management console as well. It cost me about $120 a month. It's money well spent. Yeah. Okay. And we are lean here. I don't have any full-time employees. Yeah. Okay. Next up, Lalitha. Hey, Lalitha, how are you? Wrote, how do you get strategically build a business model? Is it with a good narrative branding, or do you need a numerical side as well? Yeah. So failing to plan is planning to fail. And I recommend everybody write a business plan. And in the business plan, the most important part is the financial statements. And at the beginning of today's webcast, I talked about revenue. So when you're forecasting financial statements, always start with revenue. And then many other line items are a percent, or expense line items are a percent of revenue. And there's more to it. But I would really focus on financial statements. Yeah. And the reason you want to do that is because if you're trying to raise capital, and you want to articulate what the use of proceeds are from the money you're going to raise, what you do is you show them your financial model, your investors. And if in years 1, 2, and 3, you're going to lose $500,000, for example, and then break even in year 4, then you need to raise $500,000. And you can show the line items of the expenses where you need to raise that for. For example, sales and marketing, R&D, that sort of thing. Yeah. And that's all included in the MBA program as well, all that stuff. Yeah. Okay. All right. All right. Okay. Whoops. Hold on a second, guys. It jumped to me again. Give me a second here. Okay. All right. So Yannick wrote, oh, you're right, Eric. Okay. Sorry. Cool. All right. And then next up, Kyle wrote, is your MBA degree a certification or an actual degree? Yeah. So I will never let any government agency accredit this MBA program. The problem with government agencies and with traditional MBA programs is they teach you theoretical crap that was literally relevant maybe last century. They don't teach you, and my course teaches you all this, but traditional MBA schools don't teach you these things. I teach you how to network on steroids. I teach you how to use social media to expand your business. I teach you how to start a company and create a business plan. Ask anybody that's graduated from business school, so do you know how to start a company now? I teach you how to manage your own money. Business schools teach you how to manage other people's money. I teach you how to present. I teach you how to sell. And I teach you how to program. And I keep adding new content to the MBA every single year, so it's always up to date. So I will never, ever partner with any government agency for accreditation. Yeah. Okay. Okay. And then Pulasli wrote, hey, Chris, how are you? Today you sit down, new vibe. Yeah, good to see you. Yeah, so I only got a couple hours sleep last night, but I feel good, man. I feel good. Yeah. My Oura ring told me to take it easy today. Take it easy. Yeah. Okay. Moving on to Bakul, who wrote, in California, we are planning to have BMW solar and produce green hydrogen, which will be 800 kilograms per day. Please help us to sell green hydrogen to companies like Toyota, Nikola, or Chevron. Yeah, the best thing I can suggest is to network aggressively. You can go, and I showed this earlier on my website. There's a book you can download for free just on how to network. And in my MBA program, in the first semester, I teach how to network on steroids. Yeah, and every time you see, I know you're not going for a job, you're trying to get partners and customers. But every time you see a job opening online, if you apply, you literally have a 1 in 250 chance of getting that job. And the person that ultimately gets that job is the person that knows somebody at that company. So these are the new rules. So what you have to do is aggressively network to get customers or a job. Yeah. And if you use the methodologies that I teach you in the MBA program and it doesn't work, get your money back or let me know and I'll help you with your LinkedIn profile. Yeah. Okay, and Eric wrote, is TikTok safe? So much cybersecurity buzz around it. Yeah. Yeah, it's you guys all saw the news. I think it was European Commission won't allow their employees to use TikTok on work devices. And U.S. government officials in many offices don't use it either. I don't know, man. Like, I use TikTok a lot. I love it. When I'm at the gym in between sets, I'm always watching funny videos by like Dave Chappelle or whatever. But I don't log in with my name. Yeah. Yeah. And if you don't feel it like it's safe, what you can do, and this is what I do, I use a VPN that Marquise Brownlee told me about, a boot called ExpressVPN. And it's like $10 a month, and I can log in from anywhere in the world. It thinks I'm from anywhere in the world. So right now I'm logged in from Mexico, right? You can choose any country you want, or many countries at least. And it's well worth it, ExpressVPN. I'm not sponsored, yada, yada. But it's like $10. You can use 5 or 6 devices per month. I think it's well worth it. Yeah. Yeah. Eric wrote, Templeton has ETFs. Yeah. I would just go to Vanguard. Yeah, they got the lowest fees. I guarantee you, Vanguard's fees are lower than Templeton's. And then you wrote, Templeton site, I couldn't find fund expense. Yeah, so all you have to do is type the name of the fund in Yahoo Finance, type the ticker or the name, it should show you the ticker, and you'll see the expense fee. Yeah. And if you can't find it, let me know and I'll find it for you. Kyle wrote, how do you choose specific ETFs like Zrox versus VU? Yeah. So I always look at 2 things closely. I look at the expense ratio, the fees, and then I also look at liquidity. And you never want to invest in something that doesn't trade that much. And a lot of ETFs actually are thinly traded. That's why it makes sense to stick with Vanguard if you can. Yeah, but let me show you the best website on the planet when it comes to doing ETF research. And it's free. You go to etfdb.com. That stands for ETF database. Okay. And then right here, you can do an ETF screener. Okay. And you can screen by geography, type, whatever it is. So for example, if you wanted to invest in Argentina, and don't click the map, doesn't work that well. Scroll down here. If you want to invest in Argentina, what you can do is you can invest in this fund here. The expense ratio here is 0.59, which means for every $100 you put in, you're going to pay 59 pennies per year. And the less liquid an ETF is, usually the higher the expense ratio. Okay. Now you want to go to type this ticker here in Yahoo Finance to see what the average daily trading volume is. You can click here to see what the components are. Mercado Libre is probably a big position here. Which eBay used to be a big investor in. I remember that years ago. Yeah, Mercado Libre here. Yeah. But this is a great place to go. etfdb.com. Yeah. Okay. Okay. Next up, and let me know if you guys can hear the guy drilling next door. Just curious. Yeah, I can hear it, but I don't know if my mic is picking up on it. Yeah. Okay. All right. Next up, Eric wrote, "What do you think about the book, The Intelligent Investor?" It's excellent to learn about value investing, but make sure you're drinking a lot of coffee because it is dry. It's dry. And I remember Warren Buffett, when he guest lectured in my class at Columbia Business School 8 million years ago, back in 1999. He was there, and his wife was there as well. God bless her, she passed away. And she was teasing him in the classroom that day. It was so funny because she said that on their honeymoon, the only book he brought with him was The Intelligent Investor. And the reason he went to Columbia is because the author of The Intelligent Investor, Ben Graham, was a professor there. That's the only thing I have in common with Warren Buffett. And by the way, he's a great investor, but I think he's a better communicator even. And that's his brilliance. You never watch an interview with Warren Buffett and afterwards tell yourself, I'm confused. He knows how to effectively communicate, which is why he's done incredibly well. And all this free publicity he gets, basically he's educating the market, but also it's free PR. It's genius. Actually, another thing we have in common is we both took the Dale Carnegie public speaking course at the age of 19. Yeah. And Warren Buffett does not have his Columbia degree on his wall. He's got the certificate of completion for the Dale Carnegie course. Yeah. All right. Next up, we've got Super Dave Guitar wrote, "Good morning from New Orleans. How are you? Great to see you." And my little sister actually is married to somebody from New Orleans. She lives down there. Actually, she lives down in Louisiana. Yeah. And then you wrote, "I've taken most of your personal finance class and loving it." Thank you. Appreciate that. "I was looking for information on which brokerage and software to use for that." Yeah. So since you're in New Orleans, I recommend using Think or Swim. And now it's owned by TD Ameritrade. It's not available in every country. It's available here in the United States. I would definitely use TD Ameritrade's Think or Swim product. And I have a course also on options, which is part of the MBA degree program, where I give a tutorial on using Think or Swim in a lot of detail. Yeah, thank you. Okay. Next up, Manas wrote, "Can you please explain the inverse yield curve and all things necessary for inflation and recession?" Yeah, absolutely. Yeah. All right. So what I'm going to do actually is I'm going to stand up. All right, this is me standing. No, I'm too tired. I'm going to sit down. Sorry. I'm going to sit down and I'll show you the yield curve here. All right. So if we go together, and I'll also show you how to do this for India, which I know is where you're from, in a minute. Okay. So if we go to treasury.gov and we go here to data and then daily treasury par yield curve rates, we can see the rates that the government has set, okay? And so the way it works is the government will set short-term rates and the market will kind of decide what longer-term rates are. So this here is short-term, this is long-term, 30-year. So if we look at the 1 month right now, as of today or yesterday, you see that 1 month rates are 4.62%. And the 30-year rate is 3.94%. So on the chart, this is higher and that's lower. That's an inverted yield curve. And usually what that implies is that the market thinks that rates are going to be lower in the future. Therefore, the economy won't be doing well in the future because the government will have to cut rates. And most of the time, when you see an inverted yield curve like this, it indicates that a recession is coming, if you backtest it. Now, if we go here, I'll just do a search on the word yield curve just to show you a graphic. So most yield curves look like this one here, okay? An inverted yield curve, oh, this looks like a good graphic here, yeah. So most yield curves look like this, okay? And in India, it looks like this right now. In India, you can't get data on the 30-year, but you can get data on the 1 month and the 10-year, okay? So India looks like this, which is normal. This is what America looks like right here. And what this means is in America, people expect a recession, but not in India, less likely. And one of the reasons is because India has not been as adversely affected by Russia, obviously, as America, because India is buying oil from Russia, and I think the import and export volume from India to Russia, to and from Russia, has gone up 400% in the past year, right? So more of an impact on the United States. Although I will say that in India, the difference between short-term and long-term rates has gotten a lot smaller over the past 3 months, right? So maybe the yield curve in India looks like this right now. Yeah, so hopefully that explains it as set by the Bank of India, interest rates there. And if you have additional questions, please let me know. Now, what happens is when I've got a prop for this. I got a prop for everything, guys. Where is it? Here's my golden gun. Okay. So the way it works is when the economy is not doing well, what the government does is they buy back bonds that they issued from the big banks. And when they buy back bonds, they're giving the banks money. Okay, there's 150 reserve banks. And they're giving the banks money because they're buying the bonds. In return, the banks get money. So all of a sudden, the amount of money out there in the system increases. And whenever the supply of anything increases, the price goes down. Kind of like PS5s. You can now finally buy them. So instead of paying $800 for a PS5, you can now get them for 500 and change, whatever it is. And so, and I have to use this prop because it's fun. So when times are bad, what the government does is they cut interest rates. They jumpstart the economy, right? Fake money, by flooding the market with more money. And when times are really good, they're supposed to raise interest rates. It's good fiscal policy so that they can cut rates later. Okay. Now, the opposite is if they raise rates, they're taking money out of the system. Less supply of anything means the price of it goes up, meaning interest rates. Okay. And so the government will charge banks more or less for money. And then the banks will, it's kind of like their wholesale, we are retail. And, you know, the price filters through to us as well. Yeah. And if you have additional questions, please let me know. That was a fun one. Okay. Next up, Super Dave wrote, a bit of a breakdown on that would be great in the class. Okay, cool. Yeah. Yeah. And if you have additional questions, Super Dave, and Manas about the yield curve in the United States, India, or any country, or how the mechanics work, let me know. And the Bank of India will set interest rates in India. In the United States, it's the Federal Reserve. And in pretty much every other country, it's the Bank of whatever. So in Canada, it's the Bank of Canada. In Europe, it's the European Central Bank. In the United Kingdom, it's the Bank of England. In Japan, it's the MOF, Minister of Finance. Yeah. Okay, Caroline, how are you? Caroline's one of my Silver MBA students. She is from France. She now lives in Ontario, and she is working on selling her crepe business for $65,000 on Kijiji, right? And we'll go through the next version of your copy if you want today at 10 a.m. During the Silver office hours call, if you want. Yeah. And I hope you took pictures of the truck this time too. Yeah, I'll take a look. Yeah, good to see you. And then you wrote, congrats on your last book. Great shirt. Thank you. Canada, my people. Yeah. Okay. Lalitha wrote, in investing, how does the ESG influence investment? Yeah. So ESG is kind of a newer phenomenon, which stands for environmental and social governance. And it's an investment philosophy where you only invest in companies that do good, right? You don't invest in unethical companies or companies that pollute the earth or do mean things like selling tobacco, whatever. Yeah. And so it's definitely a big thing. A lot of younger people are into it. I'm certainly into it as well. I'm not a younger people. Yeah. Yeah. But I think it's going to be more relevant. And whenever I think of investment themes, I always ask myself this one question. In 5 years, will this company or sector or investment theme be more relevant or less relevant than it is today? And I think ESG is going to be much more relevant in the long run. Yeah. I'm a fan. Okay. And there's a lot of Islamic funds also that won't invest in companies that sell alcoholic beverages and all that stuff. I don't drink anymore, but I don't drink any less. No, I don't drink. Okay, next up we got Hari. Hey, Hari, man, what's going on? Great to see you. Hari is one of my silver students. He got an internship at the Boston Consulting Group, which is awesome. Now he works for another company. He's doing great. And I have another one of my students, McKinsey, contacted me recently to do a reference check. One of my students now, my MBA students, works at McKinsey. It's pretty cool. I got rejected by BCG and McKinsey. Yeah. Benjamin Netanyahu used to work for BCG. And McKinsey is laying off 2,000 people, which I think is the biggest layoff they've ever done. No company is immune, man. Times are rough. Yeah. Okay. Hari wrote, hey, Chris, you're growing younger. Good to see you after a long time. It's good to see you. I miss you, man. I miss you. I hope you come on the Silver Zoom as well. Yeah. Along with Renvier and Carolyn and toute la famille. Tous les enfants sont ici. Yeah. And Carolyn, je veux faire le grasse matinée. Okay. Okay. Next up, I loved your YouTube video of you reacting to the Wolf of Wall Street. Fair play to you, Chris. Thank you. I appreciate that. God bless you. Thank you. And then next up, we got, give me a second. Matt wrote here, Chris, I would love an intro to the CMO. Cassandra, awesome. Excellent. Remind me about it today during Platinum Office Hours, and I'll type the message in real time. Yeah, she's wonderful. You'll love her. Yeah. She's so Canadian. She's the best. Yeah. Okay. And then you wrote, what do you think of the Fisker Sport Ocean EV? Yeah. Well, Fisker I thought they went belly up a number of years ago. It was them and Tesla, and I thought they went belly up, but maybe I'm wrong. Yeah. All right, next up, the Berlin from San Bernardino, my former gold students, local here. I hope to meet you on August 12th and 13th at our annual alumni event. Yeah. So the Berlin wrote, good morning, brother. I hope you had a fantastic weekend. I did. Thank you. It was great. It was great. I don't work on weekends anymore. Never again. I'm trying not to. Yeah. You know what I did last weekend was I binge watched The Last of Us, which is an epic masterpiece of a show on HBO. And then I played The Last of Us Part 1. I finished it. I bought the remastered version. I had to play with the lights on because I was terrified. Yeah. It's so good. And now I'm doing The Last of Us Part 2. Yeah. So good. Yeah. Okay. And then Mike Flynn wrote, when calculating the liquidity ratio, you have to take into account potential taxes, i.e. capital gains, etc. I don't know. I don't know the answer to that question. Sorry. Okay. Give me a second. I can't just leave you hanging there. Give me 1 second. Give me 1 second here. I'm going to have to get back to you on this. I'll show you here. If you want, I do teach about this actually. So if you go here to just the website, and then up here, you do a search on liquidity ratio. I can't remember. Liquidity ratio. I definitely taught about it somewhere in here. I can't remember. I can't remember. I know there's 4 different liquidity ratios. So let me know which one you're referring to. There's 4 main ones that people talk about. Let me know which one you're referring to, and I will answer the question. Yeah. Or I'll make something up, which is what I usually do. Just kidding. Okay. Yeah. All right. Next up, the Berlin wrote, Chris, what do you think about restaurants testing subscription-based models? And if it works, how will that affect small moms and pop restaurants? Yeah. Yeah. So the whole subscription-based economy is something that the software sector created last decade. And before that, it was the newspaper and magazine industry. It's great for revenue visibility because you can charge a smaller price. And then there's less churn as well. And I'm starting to morph into that as well. You'll see on YouTube, people can subscribe to my channel to buy courses and stuff as well. So restaurants, it was Taco Bell, that started beta testing this a couple of years ago. I think it only makes sense if you're a large franchise with locations everywhere. If you're a small mom and pop shop, it might be a little bit harder. Yeah, yeah. But I'm all for it, and I always try to eat local. Support local restaurants. Yeah. But I think it's something that is going to be more in demand. And I think the way that the market is going to move is that companies like Grubhub and DoorDash, et cetera, they're probably going to have subscription-based business models for certain restaurants. And it'll filter through, and the small mom and pop shops will get something based on that. Yeah, I think. Maybe Uber will do it as well. But I don't trust Uber. Yeah. Well, I do now that Travis is gone. A bit more. Okay, next up, Kyle wrote, VPNs, virtual private networks, can be tracked back easily to the original IP. Better security is used Tor. Yeah, Tor is the open source browser. I've used that as well. Yeah. I find it slow though. Yeah. And then you wrote, I'm 23. I get the Village People reference. Oh, you do? Good. Oh, awesome. Yeah, because I mentioned that before with this, right? This is the Village People. YMCA. My police hat. Prop for my upcoming course. Thank you. I feel younger now as I'm sitting. And then you wrote, what are your thoughts on Munger and Buffett saying Bitcoin is rat poison? Yeah. So any value investor is going to be anti, anything speculative. I remember when Warren Buffett, when he guest lectured in my class at Columbia, it was December of 1999. When the tech market was overheated and overvalued. And I remember a guy in the class with me, one of my fellow students, he asked Warren Buffett a question about a tech stock. And so the student was pitching this tech stock to Warren Buffett. And after 30 seconds or so into the pitch, Warren Buffett very grandfatherly, gently said, son, I'm going to stop you right there, because I don't know where this company's product cycle or product portfolio is going to be a year and a half into the future. And I'm more of a long-term investor. And people thought he was crazy because, tech stocks were going through the roof. And then 3.5 months later, in March of 2020, in March of 2000, I am that old. In March 2000, the markets peaked and crashed afterwards, and he was a genius. Yeah. So Warren Buffett, he tends to invest in companies, and he said this publicly too, that whenever he invests in a company, he assumes the stock market's going to be closed for 10 years after he buys it. Obviously, he knows the market won't be closed, but that's how long-term focused he is. Yeah. Okay. All right. And then is AI CPA a great website to get your CPA? I don't know anything about that. I'm so sorry. Yeah. Okay. So Makiri wrote that the mic is not picking up any noise. It's pretty cool, man. It's great. I'm using a Shure SM7B. That's the one that Joe Rogan uses, not to be confused with Seth Rogen. Okay. Next up, we got Yannick, who wrote, hey, Chris again, man. If you don't recognize me, I'm in the Platinum Program. Humble comments would also recommend a book that Warren recommended so much, Common Stock and Uncommon Profits by Phil Fisher. Thank you for that. And thank you, Yannick. I'm so sorry for not recognizing you earlier. Thank you. Okay, so that book again is Common Stock and Uncommon Profits. Yeah, that's probably more exciting than The Intelligent Investor. Yeah. Dude, if you're going to read The Intelligent Investor, I recommend read it first thing in the morning, but only read it in half-hour increments. Like get up early, half hour, that's it. Because it is pretty dry. Yeah. But it's a great book. Yeah. Oh, it just caused me to yawn too, that book. Berlin wrote, Chris, I'm going to start investing in an ETF you recommend, just SPY. And for my kids, instead of SPY, I recommend the VOO. I think it's the same thing, but the fees are lower. Yeah, I think slightly lower. Yeah. And then you wrote, and for my kids, you recommend the SPY or the VOO. Yeah, VOO. Yeah. What platform do you recommend? I have TD. Yeah, TD is great. Yeah. What's great about TD is the analytics with TD Ameritrade. It really feels like you're using Bloomberg, which is professional software I used to use on Wall Street. Yeah. If you don't need access to the analytics, and just use a brokerage firm that charges no commissions, which is most of them. And the way that these brokerage firms like Robinhood make money is they lend your shares out to hedge funds. And hedge funds borrow those shares to short them. And these platforms like Robinhood, TD Ameritrade, et cetera, all these firms, and prime brokerage firms like Goldman Sachs, et cetera, they make money on the fees of the stock loan business. It's also called prime brokerage. Yeah. For my kids, and I maxed out their 529s years ago. It's great tax incentive. And now this guy here is Andrew. He's at Berkeley, and we're paying for university actually from that. It's pretty good, tax free. Yeah. But yeah, my go-to investment is always the VU when I'm not sure where to put money. Yeah. And the S&P 500, which is the VU, has had a historical return of 10.5% on average every year. I don't know the path, but I know the destination, and I'm a long-term bull on the VU. Yeah. And if all you did was you took 20 grand, which is a lot, 20 or 22 grand, the 401k amount every year, and you threw it into the VU, then in 20 years, at a 10.5% average return, you'd have over $1 million. If your wife did that, you'd have over $2 million. If you put 15K in every year for your kids in your educational savings account, then in 18 years for each kid, you'd have 700 grand. And you can sleep at night owning the VU as well. Yeah. I mean, 500 stocks, diversification. Yeah. And I believe the last entity on the planet to go belly up would be the US government. Yeah. It's all relative. All right. And then Kyle wrote, will your MBA help me get a job for financial analysis and qualitative analysis? Yeah, if you apply what I teach, I promise you the probability of you getting the job of your dreams will increase. You know, I have one student last year that got a job at Goldman Sachs and in investment banking. And he finished half the program, the platinum program. And he got a job at Goldman Sachs. And he was in the same start class in New York City as Harvard MBA students at the associate level. Yeah. You have to aggressively network. Your network is your net worth because relationships are more important than product knowledge. And I provide you with, in the first semester, all the tools you need to network. And then in the first and second semester, I provide you with a ton of templates that you can use to do one-page investment write-ups to send to financial services firms. Or when you meet with them and you do informational meetings, you could print your resume on one side and the stock pitch on the other side as well. Yeah. And again, I provide you with all the templates you need. I think I have 12 different ones. Yeah. Okay. Okay. Eric wrote, how do you calculate the risk premium for India versus United States? Yeah. And this might be a piggyback of the question you asked 1 week ago, which was the equity risk premium. So when you come up with the discount rate to discount future cash flows into today's terms, you use the weighted average cost of capital. And so basically what that means is what percent of your capital is debt and what percent is equity. And the debt side, you get a tax incentive as well. And I can go through the math if you want more details. The equity side of it, to calculate the equity risk premium, what you do is, for the United States, I'll get to India in a second. In the United States, you take the risk-free rate, which is treasuries, 3 months, plus the beta of the stock you're investing in, times, in open brackets, the average market return, minus the risk-free rate. Now, if the beta is high, like over 2 for a volatile company, like Tesla, then your equity risk premium is going to be high. If your beta is low, like 0.3 or so for like Campbell's Soup, ticker CPB, then your equity risk premium is going to be a lot lower. Now, in India, I know that for many years, in India, they used a London Interbank Offer Rate, LIBOR. But since United Kingdom is kind of in dire straits now, my heart bleeds for them. They have over 10% inflation. The economy could go into depression. I think that in India, you're probably more likely to want to use the United States Treasury risk-free rate. Yeah. Okay. Next up, and a couple more questions, and then we're going to have to wrap it up. Oh, there's my alarm right there. Yeah. And if you guys are doing, if you want to join the Silver call, you can just go to the first lecture of the Silver curriculum. to get the link for our Zoom call that will start at in 7 minutes. Yeah. Okay. Okay. And I hope we can get to all these questions. Let me go through these quickly. Okay. Next up, the Berlin wrote, for an ETF abroad in Mexico, what ETF will you be searching for and rolling up your sleeves? I guess what I'm trying to say is, where should we start looking and what to look for? Yeah. So let's do that together. This will be fun. Okay. Let's go to etfdb.com to do research. ETF, it's in the game, db.com. Okay, we go ETF by geography here. Okay. Then we're going to go down here to Mexico. And what I'm going to look for is I'm going to look for an ETF in Mexico from a reputable firm that has low relative fees, right? That also, oh, look here, low relative fees that also has good liquidity. So let me go here to FOMC. Let's see here. Okay. We got expense ratio. Well, we know it's 0.19. That's pretty good. Actually, it's very good for Mexico. Wow. In terms of the holdings, yeah, very natural resource-rich country. Here's Cemex, which is the cement company. I met with a family actually when I went to Acapulco. I was a big investor in Cemex years ago. Here's an energy company. This might be the one. This might be the one. So let's now type this ticker directly into Yahoo Finance, and let's look at the breakdown. So give me 1 second to go back here. The ticker is FLMX. Okay, so let's go together to finance.yahoodle.com. And by the way, remember that guy Haroun from Udemy, that startup, and I interviewed him a couple of times. He actually is now on the Forbes list of 30 most influential people under 30. Amazing. Okay, so here we go here. Okay, the expense ratio, yeah, cheap, good. The volume, oh, here, this could be an issue right here. Okay, this is where liquidity gets you. Alexa, what is 8,500 times 28.26?
8,500 times 28.26 is 240,210.
Okay, it's $240,000 daily in liquidity. That's not very good. Yeah. And I always recommend only investing 10% of the average daily volume. Okay. So $240,000 per day. So don't invest more than 24K in this. This is pretty illiquid, actually. I'm not sure if I really like it. I'm shocked that the fee is so low, given the liquidity sucks. Yeah. All right, let's go to holdings here. Okay. And this will really explain a lot about the Mexican economy here. Basic materials, as I mentioned, energy. This is wrong. Yeah, this data here is wrong. I know there's definitely a lot of energy companies in this index. Garbage in, garbage out. Yeah. Huh. Yeah, I don't like the liquidity on this one. Let's take a look at another one. Okay, let's go back here. Hold on. And remember, illiquid stocks own you in a down market rather than vice versa. Okay. ETF with Mexico exposure. EWW. This is probably going to be a lot more liquid. The fees are higher, but I don't care if it's liquid. So let's go to EWW. And EWC is Canada, EWZ is Brazil. Okay, EWW. Okay, iShares. Okay, oh yeah. The fees are higher, but I would prefer this one because liquidity is much better as well. Yeah. So Alexa, what is 1.9 million times 58?
1.9 million times 58 is 110.2 million.
So that's 110 million versus 240,000 daily. Yeah. Wow. So Alexa, what is 110 million divided by 240,000?
110 million divided by 240,000 is approximately 458.3333.
Okay, so it's more than 400 times more liquid than that other ETF. Yeah. And although the fees are higher, I don't care because it looks like it's a lot more liquid. Let's go to holdings. Yeah, it's the same thing, right? Pretty much. Yeah. So this is the winner. That's what I would look into. Obviously, you got to do research on the top 10 positions as well. See if you're comfortable with them. Diversification is not that great here. 16%. That's pretty high, man. 14. I think for the VU, the biggest component is like 6 or 7%. Yeah. So you're not going to get the best diversification here, but you will get exposure to Mexico. And this is very liquid as well. Yeah. Okay. All right. Oh, all right, guys. I see there's a bunch more questions. I'm so sorry. Won't be able to answer them. Just save your questions. Ask me again next week, please. Or what you can do is if you're in the Silver MBA program, just go to the first lecture and you'll see the link for this week's Zoom. I'll see you guys on the Silver call in a couple of minutes. And as with all calls, I end with this life-changing video that I licensed from the Silicon Valley Historical Association, which is life-changing. It's an interview with Steve Jobs. God bless you all. Thank you. And I'll see you next week and every week. Thank you.
When you grow up, you tend to get told that the world is the way it is, and your life is just to live your life inside the world, try not to bash into the walls too much, try to have a nice family life, have fun, save a little money. But life, that's a very limited life. Life can be much broader once you discover one simple fact, and that is everything around you that you call life was made up by people that were no smarter than you. And you can change it. You can influence it. You can build your own things that other people can use. And the minute that you understand that you can poke life and actually something will, if you push in, something will pop out the other side, that you can change it, you can mold it. That's maybe the most important thing, is to shake off this erroneous notion that life is there and you're just going to live in it, versus embrace it, change it, improve it, make your mark upon it. I think that's very important. And however you learn that, once you learn it, you'll want to change life and make it better, because it's kind of messed up in a lot of ways. Once you learn that, you'll never be the same again.